Good morning, folks. This is Aimas. I'm Chief Market Analyst at Evertrade, and welcome to our daily technical analysis video. In today's segment, I am going to discuss about the S&P 500 and how the index is ready to resume its upward trend. Now, that is quite critical because the index has seen another down week, and I'm referring to last week's price action. So let's have a conversation around potential support and resistance levels. But before we do that, as always, it is important for us to go through this slide of disclaimers and risk warnings. Anything which we will be discussing in this particular video can be it cannot be taken as an advice. This is purely for educational purposes. Now, as always, I'm going to bring out the MT4 platform, the platform which we all know how it looks like and then how to work with it. Now, as always, I am going to begin the analysis by looking at the weekly time frame. Now, when we look at the weekly time frame, you see that there are several different lines on them. So we can ignore them, or let's just say that I'm going to delete them just to make things a little bit more easier, right? Now, the three lines that we should be really focused on our weekly time frame, folks, are as follows. First of all, in this one in purple, this is your simple 50-day moving average, and then followed by that, this is your simple 100-day moving average, and this is your 200-week moving average. So all of these moving averages are your weekly moving averages, not your daily moving averages. Why? Because we are on our weekly time frame. As you can see that the tab is pressed. Now, the moment that I tap into the daily time frame, these moving averages, which were weekly moving averages, will change to daily moving averages. As you can see that the price is very close to its 50-day moving average, but on a weekly time frame, we are still very far from its 50-week moving average. Now, when we look on the weekly time frame, the first thing that we need to note is the price trading above these moving averages or below these moving averages? Because if the price is trading above the moving averages, it confirms that the trend is skewed to the upside, and it is likely to remain to the upside. An opportunity, a massive opportunity for traders who do not like too much of a risk, could be when the price comes close to its 50-week moving average, like how the price was trading close to its 50-week moving average right over here. But even bigger opportunities for traders who do not like to take much risk at all is when the price retraces back to its 200-week moving averages. It doesn't really happen that often, but whenever it happens, the price tends to move very higher. So as always, over here, when the price retraces to its 200-week moving average, we saw this massive rally for the S&P 500 index, and then the price retraced back towards its 200-week moving average. Again, we saw a massive rally to the upside, and then more recently the price not only retraced but it broke below the mid 200-week moving average, something which doesn't happen that often at all. But the moment that the price broke above the 200-week moving average, that was an indication that yes, this bull momentum is about to change its trend and it is going to go into a higher gear, and then that is what happened. Now, for traders who want to practice patience, you may want the price to wait for the price to come near its 50-week moving average, because 50-week moving average also tend to form a good base. Like you can see over here, when the price came near 50-week moving average, it moved higher, it came back to its 50-week moving average, and then again moved back up, but then it broke below the 50-week moving average, touching all the way to 200-week moving average. But when the price broke above the 50-week moving average, you can see the two retests happen, and then again the price moved higher. So this is a pretty good indicator, but not as solid as the 200-week moving average. Now, on a daily time frame, the concept is again very much the same. Every time the price retraces back to its 50-week moving average, 50-day moving average, that is an opportunity, my friend, for the index to move higher. And right now on a daily time frame, we do have that opportunity because the price is trading very, very close to its 50-week moving average. So let's see how the price evolves from here. Let's see how the market price action goes from here. But in terms of its resistance, if you are taking the trade, I would not target anything less than all-time high, which is sitting in around 3548 to 3590. That is the target that you'll be very much looking at. But for traders and investors who want to practice a little bit more patience, traders who wants to take less risk, they may want the price to wait for the price to come near its 100-day moving average, because 100-day moving average has a better track record of when the price comes to it, and when price retraces it, then it moves higher. From here, as you can see from here, the price retraces to 100-week moving average. The moment that the price well, over here the price went below, but the moment that the price went above the 100-week moving average, we saw this massive rally to the upside. But usually when the price breaks the 50-week moving average and the 100-week moving average, it goes towards the 200-week moving average or even lower. We've seen that evidence of that over here. We've seen the evidence of that over here as well. So every time the price breaks that, we kind of move to the downside. But right now the opportunity is right over here. As long as the price stays above the 50-week moving average, the battle is still on. For me, the chances are that the price is going to continue its journey to the upside. I think this could be just a dead cat bounce, but I can be completely wrong. And the confirmation of that will come when the price breaks above the high of this or the high of last week. The high of last week is on top of this particular candle. All right, folks, but nonetheless, this is a good entry point in terms of a price. So let's continue to have a look on this price action. Let's see how the price can really evolve from here, because that is when we can see more price action, more a bull run for this coronavirus stock market rally, and then that is really likely to drive the markets higher. Now, quickly moving into a smaller time frame, which is your 4-hour time frame, what we're looking at is that more weakness, more weakness, more weakness. Why? The price is trading below all the three important moving averages, 50, 100, and 200 days. On the hourly time frame. And as long as the price continues to trade below this downward trend line, I really do not see the potential for the price to move higher. So this bonds quite well with the daily time frame, because in order for this upward trend to continue, the price needs to break above this downward trend line. Now, the confirmation of that will come when the price will break above this 200 moving average, this right over here. We want the price to break above this one, because the moment it breaks above that, we will have a lot more confirmation, a lot more strength on our daily time frame, because right now, yes, we have an indication that the price is back above the 50-day moving average, which is positive. We certainly do not want the price to break below that, but further confirmation is going to come from the 4-hour time frame when the price continues to move higher, and it comes and it challenges its 200-day moving average, and then breaks above this downward trend line, and then it will also have to challenge its 50 and 100-week moving average. But once the price confirms and breaks above all these moving averages, that means the trend is going to be very, very positive for this coronavirus stock market rally. And the last time it happened was back in June, when the price was trading below all the moving averages, and it came and it broke above the 200-day, then 50-day, then 100-day. But then again, there was a bit of a retracement back to this, and then that rally started. And ever since, the price has tested the 100-week over here, but it has never tested its 200-week moving average. Now, on the 4-hour time frame, we have seen for once price breaking below that, the second time price breaking below that, the third time the price breaking below and above that, and then again now trading to the downside. And we are forming a sort of a double top on a on a 4-hour time frame. So keep that in mind as well. So the price can retrace from here. So that possible trade is could be for an intraday time frame is that put a stop loss on top of this 200-day moving average, let the trade run to the downside. But the upside on that is let the confirmation comes when the price breaks above the 200-day moving average, and put your stop losses below this particular candle, just below this double top, which is about to form right now. All right, that's all for today. Happy trading, and I'll see you guys next time, same place.